Welcome, dear traders. The last few months have been rather difficult for global markets. Analysts warn that traders should be bracing for bigger challenges. How to get the economy back on track, cap inflation, and avoid a downfall. Central banks worldwide are trying to tackle this issue. In such stressful times, investors are able to keep a cool head, quickly reacting to market changes. Let's see what sentiment prevailed in the Asian session today. US stocks closed yesterday's session at almost a 4-week low. There are plenty of reasons for a bearish sentiment on Wall Street. Apart from a galloping inflation, speculators were caught off guard by a rally in the bond market. The yield on benchmark 10-year Treasuries jumped to a 3-year high. Such a rapid increase adversely affected the shares of the tech companies. The sell-off was also triggered by fears of a recession and a slowdown in economic expansion. The geopolitical situation is also rather disturbing. This week, traders are looking forward to the fresh inflation report. The figure may provide hints about the Fed's monetary policy plans. The regulator has already signaled it will take an aggressive approach to fight high inflation. The consumer price index in March is projected to reach 8.5%. If so, it will be the highest figure since 1981 in annual terms. It's not surprising that in the current situation, investors avoid risky assets, flocking back to safe haven ones. The US dollar as a safe haven currency is taking full advantage of a risk aversion. Besides, its rise is bolstered by the same reasons that are pushing down stocks. The US dollar index has finally climbed above 100 points against its main rivals. The euro, its major counterpart, may sink even more amid the results of the French election. The US dollar has already approached 100.19, which is almost a 2-year high of last week. It's moving in the range of 99.93 and 100.23. FX strategists assure that the demand for the US currency will remain high in the long term. This is why it may grow to 103 points. At the moment of making material for this video, the US dollar was moving higher, trading at 100.12. The most spectacular rise the US dollar showed against the Japanese yen. However, it was an easy win as the yen has been weak for the several months. The Bank of Japan maintains its ultra-loose approach, while central banks in other countries are gradually shifting to monetary policy tightening. And the Fed is taking the lead as the most hawkish regulator. As a result, the dollar-yen pair hit 125.66, the highest level since June 2015. In today's Asian session, the price climbed to 225.58. Analysts reckon that the pair is steadily moving to a long-term resistance level of 125.29. And today it keeps extending losses, trading in the range of 125.09 at 125.06. And it's rather logical given that a weak yen caused an increase in gasoline and other commodity prices. The Bank of Japan remains an outlier in the global shift towards tighter monetary policy. At the same time, Finance Minister Shinichi Suzuki refused to comment on the situation in forex. Yet, he admitted that the current market conditions could affect the Japanese economy and financial stability. So, the government is closely watching currency moves and its impact on the economy with a sense of urgency. It means that the yen is likely to continue its downward movement. Asian stock markets are usually very sensitive to the results of Wall Street trading. Therefore, equity markets in Japan, Australia, and other Asian countries follow the trend set by Wall Street. Today's Tuesday was no exception. Australia faces the same problems as the United States. For example, recent surveys have shown that when it comes to antipode currencies, purchase prices and labor costs are growing at the fastest pace. However, the Reserve Bank of Australia is expected to hike the key rate in June. It will be the first rate increase in a decade. So the Aussie drifted lower due to the gap in the rate increases, high inflation and the fall in oil prices. On Tuesday, the Australian dollar continued to decline, trading around 0.7432. However, the Australian economy is getting stronger. The business confidence index rose to a 5-month high in March. There are almost no signs of a negative impact of geopolitical events on the local economy. Although the Aussie is now dropping versus the US dollar and it's unlikely to incur huge losses, in the Asian session it was consolidating within the channel of 0.7400 and 0.7442. And that's all for now. Keep abreast of the latest market news with the InstaForex TV channel. See you soon.